And good afternoon. Welcome into Market Talk for this Wednesday, February 16th. Great to have you join us once again. Thanks for making us part of your day. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com is where you can find us. All the latest news of agriculture, all of our social media links, our streaming sources, everything is online at MarketTalkAg.com. Well, after Tuesday's sell off, we came into the trade here on Wednesday and turn things back around, led by the soy complex. We got plenty to discuss. Let's bring in our good friend Mike Zuzolo with Global Commodity Analytics joining us here on the show this afternoon. Mike, good afternoon to you, sir. And, the volatility continues in these ag markets. Just yesterday, saw that big sell off. We were hearing that Russia was pulling back from Ukraine. Now we're hearing not so much, maybe. You throw in South American weather, a lot of other factors. It remains a very volatile situation right now in the grain markets.
Unmistakably and undeniably. And we had a new one come in this week. We knew the Federal Reserve was going to be talking this afternoon. So that's one other one for the week that we were already prepared for. But what we really weren't prepared for, I think, Jesse, was the issue of the avian influenza. And I think that is a big deal potentially for me, and actually probably helped clear up a very muddy picture as you kind of laid out. It's extremely hard to read the tea leaves right now because there's too many tea leaves to go through to read. I mean, that's really what it is. It's the volume of tea leaves to be able to get to read them. And even the quant traders and the managed money funds, I think, are having a very difficult time managing their risk. And even with their AI, they're having a tough time with it all in this age of inflation, because their models weren't built around inflation. And I think this is where that volatility, as we keep talking about, it's not going to go away. It's going to stay at elevated levels and probably get even more elevated the drier we get in South America and the drier we get in the wheat belt. But I like how you kicked off our show today with the soybeans leading. I think it's a really valid point to make.
Well, and let's talk a little bit more about soybeans leading. You mentioned South America, and that's probably the big leader, at least in the soybean complex, that the trade is watching. I'll pull up the monthly soybean chart on the video as well. But I mean, you look at beans, bean meal, bean oil, very strong today as well, pushing back up near 1580, 1590 range on the front months of the board. Talk about what you're seeing with soybeans here after today's close.
Yeah, short term, meaning this week, and what we've seen here in the last 2 weeks, roughly 3 weeks, maybe right around that WASDE report, and since then, has been a market that wants to buy beans and sell corn, and buy beans and sell wheat. Well, why is that? Well, to me, it got more clearly defined when that avian influenza hit the markets and hit the meal markets specifically, that the soybeans needed the wheat and the corn to go up higher. And we had a substantial correction off of that recent high we made earlier this month, just a week or so ago, a good 40 or 50 cents above us at this point. And so that was the avian influenza. But I think the soybeans, the trade has dedicated itself at this point in the midst of, as you say, the Russian geopolitical tensions, in the midst of weather risk, as you mentioned, and in the midst of some of the avian flu issues. If you can take that off the table, the trade feels more comfortable, even with avian flu, I believe, coming in and buying the beans because they think the bean supplies are the tightest, and the bean supplies are falling the fastest in South America in relation to corn. And I think this is really important because it's familiar territory for what you and I have talked about before. With the influenza that we have right now for the bird flu, we lost about 50 million birds back in 2014, 2015. We have this influenza in Kentucky, the sixth biggest poultry state in the country by volume. And so it is a demand issue now. And realize the trade has been trading almost all supply issues and not really given demand much thought at this point, because supply keeps falling because the weather is not turned around. And that makes sense. Now we have a demand issue on our hands later down the road. So when this avian influenza came into play this week, it dawned on me that what you and I have been talking about the grain markets probably having the best price action for hedgers to hedge the first half of the calendar year, and the livestock guys having the best price action the second half of the calendar year, that avian influenza outbreak, especially if it continues to get bigger, would, I think, even solidify that analysis even more, because it gives your livestock supplies, it cuts them on limited competition and limited substitution ability, and it gives the livestock bull more upside potential in the longer run. So kind of a short term, long term, I'm trying to bridge the gap here, and it may take some additional conversations about what exactly I mean, but I wanted to introduce that to you because we talk every week.
Well, and I would agree with you on that. I like how you put that, Mike. Looking at that relationship and thinking about that here as we go through the first half of the year and into the back half of the year. Soybeans as well, though. I think one of the bigger catalysts that we're going to continue to watch and see what happens is South America. I know you have a pipeline to South America. We're just starting to get those combines to roll in those drought areas. What's the latest you're hearing from your sources down there?
Yeah, southern Brazil is still losing production by the day, by the week, and Argentina is as well, from what I'm hearing. And I know we're not ready to start harvesting in Argentina yet, but we're in some critical phases right now for production. And Entre Rios, Buenos Aires provinces, and Santa Fe provinces, the three biggest provinces of the country that produce the corn and bean crop in Argentina, some of those provinces had 100+ degree temperatures this week again. And this is the second or third time they've had to deal with that. And so production continues to go down. I think probably, who was it, AgroConsult, I think it was, came out this week and talked about their crop tour. And they said that their volume, or their yield per hectare, is probably the lowest since 2015, 2016. I mean, you're talking about a crop year where we did 96 million tons, roughly just under 96 million tons of beans. Granted, the acreage base is bigger than back then, but it kind of gives you an idea, Jesse, that, and this is why I was slow on taking down my estimates, is that we're really in the crunch time now. I mean, yeah, northern Brazil crop is made, but southern Brazil crop is every bit as important to getting us up to that 130 level. And so it's pretty confident analysis now. We're below 130. We may be below 125 in 2 weeks, in my opinion. And some traders are already there. Some analysts are already there. So here again, I think in the short term, that's why the beans have had such a strong suit. And we know that China's trying to rebuild their hog herd. So we don't have as much fear, as long as our currency doesn't go sharply higher against the Brazilian currency or the Chinese currency. We don't have as much fear about some competitor coming in and an importer being able to substitute with somebody else. That's not on the table as much right now as it has been in years past.
Well, you mentioned all this about soybeans, everything we've talked about so far today, the supply side, the demand side. I know previously you and I have talked about how wheat should be the leader, or needs to be the leader. Do you think in the short term, soybeans, the soy complex, might be retaking the lead here, or are you not seeing that big picture change?
No, I'm sticking with what I've been talking about with you, and I really appreciate you bringing that up, because that monthly chart we looked at, there's a chance I think we can get up to that old high from last May of that 1677.5 level. But I'll stick with the idea that it's going to take wheat and corn to propel us up to retesting that level. And I think, though, this week, and bringing it back to the short term for both the trader and the hedger, but I mainly work with hedgers, Russia, as you talked about, the Federal Reserve and weather were the three primary things. And it seemed to me that today, was going to be the make or break day, or the 0 hour for those ag commodities, especially the grains, even with the avian influenza. Why? Because we'd know a lot more about these fundamentals related to the trade sentiment. So in other words, what I'm getting at is, if we can get up to that 1677.5 high from May of last year, we needed Russia, the Fed, and the weather to stay on our side. And that in turn gives wheat and corn the ability to stay on the soybean side and the soy complex side. And based upon everything I've seen so far from the Federal Reserve, the weather that I looked at in both the United States and South America, and now Russia talking about needing more assurances, as they actually, I think the United Nations just came out a little bit ago and said they're actually putting more troops out on the Ukrainian border, and the crude oil's reacting to that. But everything I saw of those three big indicators says to me, there's nothing there that of these factors that should kind of disrupt or discourage the wheat and the corn from finding support and finding short covering and finding buying and helping to support those beans. And first and foremost would be that hard red wheat weather in terms of the United States, because this big system that was supposed to come in late week this weekend is being shifted east and south, like the European model suggested early on. Now the GFS, the NAM, the short-term models that I look at, they're starting to suggest the same thing. So we come in Thursday with rain too far east to help most of the hard red wheat belt. We get that new drought monitor, and then we get some decent export sales. I would be disappointed if we didn't have a strong recovery in the wheat and the corn.
Well, let's talk a little bit more on the wheat and corn specifically, ethanol, crude oil. I know crude oil back up a little bit here today as well. And I know all of this is also tied to Russia, Ukraine, but I know we got the ethanol stocks out, numbers out here this week, and we see that production up a little bit, modest increase. We also saw stocks increased by just under 3% here, maybe a little neutral to bearish for the corn market. But talk about what you saw with the ethanol numbers today and this corn market, and as we take a look at this chart here on the video as well.
Yeah, I mean, I think this is one of those high frequency charts that I talk about that clients and subscribers get all the time, and I go through this on my seminars. I go through this on some of the other things that I do, like videos and webinars. But you can see between the red and the blue line, especially since the end of 2020, a very big relationship, a very big negative or opposite relationship in price action between these two assets. One's the ethanol margin out of Northeast Iowa, and it's currently running in the red, and that it is the red line. It's negative 13 cents a gallon right now. The blue line's lead month corn futures on the electronic board, and it's running around 645. And you see that big rally in the corn that started in Q3 of 2021 has really eaten into the margins for ethanol. So it does not surprise me that ethanol margins have gone in the red. It doesn't surprise me we've backed away on the production side. What does surprise me a little bit, though, Jesse, is this especially comes in relationship to the retail sales report that blew a lot of people out of the water, including myself, when it was put out this morning, as far as how strong it was. We should be blending more ethanol. We should be cutting production. With a cut in production, we should be cutting stocks more. And especially with today's numbers on unleaded inventories, we were down about 1 million barrels instead of being up in terms of trade expectations. So I'm really puzzled why the ethanol stocks are not going down more, even though we're in the red right now. And I think one of the key things to watch here in the next week or two is this talk about a tax holiday by some big states, or maybe even the federal government coming out with a tax holiday. That should clear us above the blend wall. That should create more pumping of gasoline, unleaded gasoline, out of the pumps and into the cars and into the traveling. And that should really change the dynamic of the ethanol supply. And I'm wondering, getting to the bottom line of this chart, with ethanol prices in the red by a little bit after the corn rally, but not enough to really hurt the ethanol demand, in my view. Is this fund related? Is this the policy? Is this the negative press coming out about ethanol again in terms of a carbon emission issue, as we see the Senate and Congress sit down and talk about the RFS? And I think it might be, and that's one of the things I'll be really watching, and one of the things I'll be talking about a lot in the next month.
Just to kind of button up and bookend our grain talk here today, Mike, any other final thoughts on the grain side specifically that you're seeing that we really want to keep an eye on here as we work through the rest of this week and work through the rest of the month?
Yeah, I'm going to stay with what we've talked about again when it comes to the new crop beans, Jesse. I really think that us hitting a new record high for the month of February last week at that 1467 and 3/4 level, take advantage of that. If the lead month beans take us to that next high, that old May high from May of last year, and the November ride that coattail, take advantage of that and hedge into that, because I think that's going to only help us do better marketing on not just the beans, but also the corn and the wheat. So don't lose sight of hedging, even though this conversation today, as I hear myself talk, has been probably more price friendly than normal.
Well, Mike, let's talk livestock today, and let's start in the hog market. You know, we're seeing good strength continuing there in hogs. April taking over the lead month now, holding a good premium to cash, but still this hog market just continues to rock higher. Pork cutout values up sharply, cash up sharply today. What are your thoughts on this hog market as we look at things here on this Wednesday?
Yeah, this is a really interesting market, because I think seasonally we should be going lower or sideways to lower, especially in the hogs. And I know the funds were short, but they're plenty long coming into this week. And I think, again, that avian influenza really boosted everybody's look in the hog and cattle market, that, hey, The funds are getting in there because they see substitution coming in for beef and pork because we don't have poultry. And I can tell you the last couple, 3 weeks I've been going to the grocery store, or my wife has been going to the grocery store. It's been getting thinner on the chicken side. One day we went and they were completely out of chicken breasts. One day we went, they were completely out of almost every cut of chicken. And so just a small avian influenza in one part of the country, given our supply chain, given our supplies, it's going to create a much bigger wave in the pond, in my opinion, Jesse. And I think the funds are very sensitive to that. So, but I think what we're doing is we're probably pulling forward some of the bullishness of the Easter ham seasonal by this ham market rallying so much and taking the cutout higher. So I'd be of the view that if we can get up to around that 108 level, that fills a gap. This would be off April hogs, lead month. If we could fill 108, that fills a gap on the weekly chart. That would also take out that 107.70 high that we put in a couple weeks ago, roughly. And if we don't take that out properly and keep on going, it would look like a double top to me, kind of like what we were talking about in the soybeans. So I'd be real eager to get, in the short term, hogs and cattle for nearby marketings hedged at this stage of the game. Again, long term, want to only do this, early part of the April, May hedges and then leave the back end alone.
Let's talk cattle. Cattle markets here today, we'll call it mixed to maybe a little lower in the feeder cattle trade. Starting to get some cash activity in feedlot country now this week. What are your thoughts with this cattle market as we continue to churn forward into the month of February?
It's really tough because I saw the Central Stockyards auction go 142 plus for both steers and heifers, Texas and Kansas. My guys around here and out west are continuing to tell me we got packed feed yards right now, and it would suggest, along with some of the crushing of the corn of what we're consuming on a quarterly basis, that those feed yards are indeed packed at this point. So I continue to think that the April cattle, especially in June to a lesser degree, probably are at the top end of their value levels at this point. More avian influenza could create more upside potential. But I think that as you get into this market price we're in and we sustain this market price, you're opening yourself up to more downside risks and profit taking by longs. So that's where these export sales become very, very crucial. I'd be looking for strong beef export sales on Thursday, but maybe not so in the pork.
We'll have to keep an eye on those numbers when they come out Thursday morning and see what we get and see how the trade reacts. Mike, as we wrap up here today, any other final thoughts in the livestock sector for us?
Yeah, one last thing is I think the Canadian truckers issue is one of those brand new fundamentals that also made a big wave in the market in terms of bringing both the small spec and the funds back into the long side of this market. So it's been a good ride. Just don't ride it too hard.
Well, Mike, before we run out of time as well, I want to make sure we talk about an upcoming seminar you're going to be having here next week. Tell us
Yeah,
about
a
this.
week from today. And thank you for letting me talk about this a second. It's going to be a week from today in Atchison. We're going to have two different sessions, a morning session and afternoon session, but they're going to be the exact same thing. I'm trying to get it for anybody who's got kids that have to get on the bus, or if somebody's got to be home in the afternoon. I'll have lunch at 12 for both groups, but we'll have the morning session, then we'll redo the seminar presentation again from 1 to 3 in the afternoon. It's completely free. You're going to meet some really great people. I've got clients from Kentucky coming, obviously clients from Kansas and Nebraska coming, but I'm really eager to get you all here and give you a free beef dinner and serve that lunch and have a really nice meeting and good fellowship.
Well, we'll look forward to hearing how it went. Well, I think we'll let you out of your Wednesday slot here on the show so you can take part in this, Mike. Just
Thank you.
I think that is perfectly okay.
Thanks, Jesse.
I know as well, if folks want to get some advice from you, they can reach out on your website. If they can't make that great session next week, they can check you out, globalcomresearch.com, can't they?
That's exactly right. And if you need to call me and you don't really mess with the web that much, which doesn't make sense if you're listening to Jesse, but 866-471-2588 is my toll free. And I know, like my old boss used to say, that's coming out of your check, Mike. So Jesse, I understand if you can't pay me for next week.
I think we'll work something out. Mike, I appreciate the time as always, sir. We'll talk to you again real soon. Thanks so much.
Thank you, sir.
Mike Zuzolo with Global Commodity Analytics, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Wednesday, February 16th edition of the show. I'm Jesse Allen. Have a